Up, you guys, back with another video. And before we get into it, like I say in all my videos, here is my channel dashboard. I show it all to you in almost every video. We're gonna look at my stats, the recent video, which is a short I did, 30,000 views in the last 8 days. It's really good. My current subscribers, it's going up. I'm liking. So our views, estimated revenue, we're at 435, so slowly going up. So slowly but surely, I like it. So let's see what happens as I continue to post more content. And nothing really else that's entertaining on this page, but I'm just going to get right into the video, and we're going to be talking about this article by Investors Business Daily. The title is called "It's Time to Sell 3 of the S&P 500's 10 Best Stocks," says Morningstar. So I'm just going to go through it. I highlight some points. I'll kind of skip around if I have to, and then I'll lead into the next part. But basically, it says that just 10 stocks are doing all the lifting on S&P 500 this year. But it is looking like too much of a good thing. Now, 3 of them are overvalued, Morningstar says. And the ones that are overvalued are Apple, Nvidia, and Broadcom. So together, they account for nearly 40% of the S&P 500's market value gain this year, and are trading for more than they're worth, says a new report by David Sekera, the U.S. market strategist at Morningstar. So as we keep on going down, so it says coming in to 2023, 9 of the 10 S&P 500 stocks drive the market were considered undervalued by Morningstar. The technology sector is becoming overvalued as stocks surge on excitement surrounding artificial intelligence. Like in my last video, I talked about C3.ai. Everyone's hyped over that. I haven't done an update on it. Maybe I'll check into it. So right now, we're looking at SPY, currently where it's at based on this data. So let's talk about the concerns of top-heavy S&P 500. So it looks like I showed above, it's thriving. S&P, SPY, is up nearly 12% this year. And as I say right here, that's enough to put 3.8 trillion of wealth into investors' pockets. But if you dig a little, you see just how precarious the situation is. Just 10 stocks are driving all the gains. In addition to Apple, Nvidia, and Broadcom, stocks powering the S&P 500 are Microsoft, Amazon, Meta, Tesla, and and Salesforce. The rally is top-heavy on growth stocks, Sekera says. The rally thus far this year has been heavily concentrated in the growth category, which has soared 19.29%, whereas core stocks have lagged, only raising 2.11, and the value has lost ground at negative 2.23. So this is basically, this little part is why he's concerned. And as you go down, it says Morningstar now thinks the large cap S&P 500 growth stocks are fully valued, but value price stocks, especially smaller ones, are roughly 40% undervalued. Energy stocks are also undervalued. And so I highlighted this because this was interesting, because for any of those that do invest, I know everyone's into the tech space, like I said, especially AI, but another which I've been seeing a lot is energy stocks. And of course, as I say right here, they're considered undervalued. So for any of those investors, of course, I am not a financial advisor. This is all based on opinion. You might want to check out some. I'll probably do a video on some energy stocks too. If you want me to, just let me know. So, of course, as it says, what does this mean? Sell, as the Morningstar suggests. The technology sector is now the most overvalued sector, trading at a 4% premium over our intrinsic valuations, whereas at the beginning of the year it traded at a 19% discount, Sekera said. While select individual opportunities remain, from a sector perspective, we now think this is a good time to take profit and move towards an underweight position. And for those of you who want me to summarize it up, it says it enough. These stocks are now pushing to a certain height where Morningstar says, you know what? you can sell, take some profits, and let's throw some of your money into some more undervalued stocks. And I mean, for some, they go for it. That's how, some people like to do that. Others like to just stay and keep on riding to see how far it can go to the top. It's based on whatever decision you want to do. But more or less, I would say investors that are more avidly looking at the stock market every day or every other day are going to push more towards selling per profit and buying other stocks at a lower price. And of course, here's all the S&P 500 gains this year. I don't have to read all of them, but you can pause the video, you can look. As you can see, the Apple's overvalued, Microsoft, which is a fair value, Nvidia overvalued, Alphabet undervalued right now. So Amazon fair, Meta fair, Tesla fair, Broadcom overvalued, Salesforce fair, and AMD fair. And of course, if you are an avid investor or you're looking, they would always advise that you go for undervalued stocks. You could do fair. It just depends. They always tend for investors to shy away from overvalued because since the price is so high, they're afraid that some mishap or loss on earnings will drop. And so you'll technically end up losing money. That's why they have these valuations. And so this is what's going to complete the article. And so after doing that, I decided to do some other research, but instead of me doing the research, I decided to use a program which a lot of you might know, AutoGPT. And so I just put it into a Google Docs, but basically I asked AutoGPT, so for a goal, I said, I want you to analyze Apple, Nvidia, and Broadcom. After doing that, I want you to tell me if the stocks are undervalued, overvalued, or fair price. According to Morningstar, they suggest selling these stocks. Tell me what would be a good decision. And so I thought, let me ask AI and see how, what it comes up with. And as I did that, and for those that don't know, I'll put the link in the bio to how you can use AutoGPT. It's really cool research tool. I'm not saying to just base all your investment advice on it, but it does help with gathering information. So you might want to check it out. But so here are the results. So I said right here to analyze the current stock prices and compare them to Morningstar's suggestion. And so this is what it said. After analyzing the financials of these companies, I have found that Apple and Nvidia are currently overvalued, while Broadcom seems to be undervalued. Pretty interesting. Morningstar's suggestion of selling these stocks may be influenced by the current market trend and microeconomic conditions, but it is important to note that their analyst is only one perspective. So I thought that was interesting that they say that Broadcom is actually undervalued. So below it says, in terms of making a decision, it ultimately depends on the individual's investment goal and risk tolerance. Like I've been saying, and of course the article says too. While Apple and Nvidia may be overvalued at the moment, they have a solid track record of growth and innovation. And of course, that's what I was talking about before, of why some people want to stay with stocks like Apple and Nvidia, especially what they're doing right now. And with Apple's announcement of its virtual goggles, I forgot the name of it, but I know the announcement if any of you guys saw it yesterday. And to continue, it says, on the other hand, although Broadcom may be undervalued, the company is heavily reliant on the semiconductor industry, and economic conditions could impact its growth potential. And so I think that's the only thing that AutoGPT found. And it says, while Morningstar suggests selling these stocks, it is important to note that their analysts may be based on different factors or a different investment strategy. Based on our analysts, we might consider selling Apple and Nvidia and holding on to Broadcom, which says it above. So, from reading the article to seeing the analysis of this, it was pretty interesting to see that, of course, Morningstar does its research and this AI did the same thing and came to the both conclusion that Apple and Nvidia are overvalued. What was interesting is that Broadcom. So I haven't done too much research on the Broadcom, but for those that might be holding it, consider here it says that it's undervalued. So it might be a good thing to hold, but also to note that it is heavily reliant on the semiconductor industry. And so if there's any deals being made in terms of that, that also helps its growth. But if there isn't, and there's, stagnant anything that's going on to stop production, of course that halts it. And I mean, other than that, I'm just gonna end this video right here. If you have any questions, let me know. If you like the video, don't forget to like and subscribe, and let me know what you're investing in. I want to know, if are you investing in Apple or Nvidia? I had Apple stock a couple months ago. I think I ended up selling it because I wanted to buy some other stock. It's gone really high. I bought it when Apple did a stock split, so that was like months ago. So it's climbed up ever since then. So it's kind of cool to see where it's at. And Nvidia, I mean, I've done, I think, call options on it, so I made some money, but that was a long time ago. But if you go on Reddit, you can see all the people that are making all kinds of money. So, I mean, these are a lot of things to look at if you are getting to investing early on. If you're a beginner, you know, Apple does do dividends. So even though if it's overvalued, you might want to wait. Invest in an ETF if you want at the moment, or invest in some undervalued stocks, which I'll go back to right here if you see any of these ones. But other than that, I hope you have a good day, and I'll see you in the next video.